Welcome everyone to our latest webinar hosted by ourselves, the MGAA. This time we are joined alongside another supplier member in Gallagher Bassett, who many of you will be aware of. Today's focus is on COVID-19's impact on the claims industry and what we can expect further down the line. For those who have joined previous webinars, I always go through a few housekeeping points. Everyone has been muted automatically apart from the main speakers. This is purely just to reduce background noise so everyone can hear the content clearly. Really importantly, we like to keep these really engaging if we can. So to ask a question, just wiggle your mouse, bring up the chat function, and a toolbar will appear on your screen and you can type a message in and that will come through to me. And then I will relay that question to the speakers today at the end of the session during the Q&A. For complete clarity, the webinar is being recorded. We will be adding this to our website afterwards as a podcast. However, no personal details will be transferred to anyone else. And finally, another important point is we always send off a feedback form just after the webinar just to see what everyone thought of the session, the content, and the use of the technology. So without further ado, I'll pass over to our speaker, the first one being Charlotte, who will introduce herself and run through the main presentation. Over to you, Charlotte.
Thank you, Ben. Hi everyone, my name is Charlotte Harrison. First of all, I just wanted to say a big thank you to the MGAA for providing us with the platform to host today's webinar, and specifically to Ben and Teresa for their support, which we're very grateful for. We're really excited to have the opportunity to speak to you all today, and we appreciate the interest in the session. I think we've got nearly 100 people in the session, which is fantastic. So you know, the support is great, and we hope very much that it'll be an interesting session for you. So just a little bit about Gallagher Bassett. Some of you dialing into the webinar will have worked with us previously, with Gallagher Bassett previously. Others may have not. Just to give an overview of who we are a leading global TPA, and we're specialists in claims management across all classes of business. So motor, liability, property, professional indemnity, cyber and other speciality lines. We pretty much do it all. We also provide risk consulting and claims consultancy services as well. Globally, we have 6,000 employees and we manage over 1 million claims every year through our UK, US, Australian and New Zealand operations. In the UK itself, we have 9 offices. Currently, our workforce are all home-based, as we know the majority of yours will be too. Really pleased to say that the transition to home working went extremely smooth. Our BCP kicked in fantastically there. So we've got all of the claim staff at the moment at home and managed to sort of seamlessly transition our F&L services as well. So as claims management specialists, we handle claims on behalf of MGAs, Lloyd's managing agents, carriers, corporate entities with large deductibles and government bodies as well. Naturally, we do work extremely closely with brokers as well, and our client base is hugely varied from a sector point of view, and because of this we have got a really good insight into the claims trends within the industry and how the current COVID-19 pandemic is affecting claims, and that's what we're looking forward to discussing with you today. So just a little bit about myself and Andy, your speakers for today. We've both worked at Gallagher Bassett for 11 years, since 2009, and previously in the carrier market, both for companies beginning with an A, although separate ones, so we'll let you guess. My role is Senior Business Development Manager, and I am focused on our MGA strategy and relationships. Essentially, I support our MGA clients with whatever they need to ensure best-in-class service, and recently been accepted onto the MGAA Next Gen Committee, which is great. So hopefully I'll be able to interact with more of the MGAA members over the coming months. Andy Sewell is our UK Technical Director, and Andy is responsible for ensuring the review of technical competency across all lines of business. horizon scanning and developing strategy for the changing claims environment, as well as looking after our strategic partnerships. So as you can imagine, he's a pretty busy guy, and particularly at the moment, obviously Andy's role is pivotal for us, because his role kind of is centered all around sort of changes that do take place in the industry, be those expected changes or unexpected ones like the pandemic has brought. If we could just change over on the slide. Thanks, Ben. Thank you. So here's our agenda for today. So we're conscious that there will be representatives from MGAs on the call who are interested in different classes of business specifically. So we're going to try and cover a variety of these, but we will be contactable after the webinar should you require any further detail on specific coverages as well. Also, it's probably worth mentioning that there are also different models that can be adopted as well for claims management, which you may be party to. So an in-house DA model, direct placement with a carrier, or in fact a specialist TP provider like us at GB, who may be appointed by either the carrier or the MGA. Whilst these models will clearly have some differences, there will be many synergies between them when discussing claims, and so hopefully the content of today should prove helpful regardless of the model that you've adopted. We've tried to avoid death by PowerPoint because we're aware that it's unlikely to be the first webinar that you've dialed into, because there's been a huge number of them available recently, and instead some of the topics we're actually going to be covering in a sort of question and answer style between Andy and I. So what we've done is we've used recent experiences and questions posed by our clients to cover items that we hope that you will find beneficial and interesting. So our agenda are shown on the screen at the moment. We're going to be covering the immediate effect of COVID-19 on existing claims. What impact has that had on volumes? How has that affected indemnity spend and costs, and how do we envisage that being affected in the future? What are some of the emerging claims trends that we anticipate seeing, and some of those we may have already started to see? And then how are we evolving claims strategies across the business and claims management to deal with the current scenario? And finally, we're going to round off with customer centricity, so sort of why the focus of the customer is key in all of this as well. If we could please just move on to the next slide. Thanks, Ben. So as a reminder, the webinar does count towards 1 hour of continual professional development as part of the CII member scheme. So we do have learning objectives attached to today's webinar, which we'll recap at the end also. These are currently showing for you on screen. So understanding the implication of the current pandemic on claims costs across the industry, being aware of the new types of claims that are expected over the horizon, understand why customer centricity is key for MGAs and how brand confidence can be protected through the claims handling process, and learning about beneficial claims management strategies. Great, so if we could just move on to the next slide, please, Ben. We're going to get started, and Andy is going to talk about the immediate effect of COVID-19 on existing claims, and in particular the correlation between the impact of the restricted movement that we've been seeing against new claims volumes. Over to you, Andy.
Thanks, Charlotte. Hello, everybody, and thanks again for joining us today. It's quite nice to have a reason to put a shirt on again for these video webinars, but I thought newsreaders across the country, what goes on underneath the desk is still an unknown. But yeah, just to really focus on that immediate effect on claims, and the impact of COVID-19 on the insurance claims environment is pretty unprecedented. All aspects of insurance claims have been and will continue to be affected by the pandemic. We've seen reductions in the high volume of claims environment of motor, and to the extent of casualty, a rise in claims in the travel sector, and of course business interruption with a dramatic increase in such claims. Much has been documented in that space, many policies not responding to claims that are made, subsequent arguments over policy wording and interpretation. Time's going to tell how that plays out, with the test cases, as we now know, to be heard in July to determine the validity of those disputed claims. Test case now, as mentioned by the FCA on Monday, involves 16 insurers looking at 17 policy wordings, that capture the majority of the key issues that could be in dispute. In that update given by the SCA, the guidance that they mentioned was asking for all insurers to check policy wordings against those that are intended to be tested, see if theirs will be impacted by the outcome of the case. The FCA expects to publish a list of all the relevant insurers and policies that may be impacted in early July and give some more detail around that. They emphasised as well the Dear CEO letter that was written on the 15th of April, in that the view remains that most SME insurance policies do focus on property damage and only have basic cover for BI as a consequence of that property damage. So in the majority of cases, insurers are not going to be obliged to pay out in relation to the pandemic. The case is focused on the remainder of those policies that could be argued to include cover. Conversely, policyholders are informed as well not to assume that simple inclusion of their policy wording in that case will mean that the policies become responsive. The FCA quite simply is seeking judgment that will help policyholders and insurers have a much clearer view on which business interruption policies are going to respond to the pandemic, and of course those that don't. The court may well decide on a number of policies that are going to, so the wording of cover, the interpretation of that wording is absolutely critical. The industry, we all will be certainly waiting with bated breath for the view of the judiciary come the end of July. I think where even if most policies do not respond to the pandemic, for those that are deemed to have valid claims, there are some out there that are very substantial indeed. And claims that are valid, insurers accepting cover, there is cover in place, and is a real requirement to ensure that swift payments are made, that we're providing clear and quick answers to questions in what's an unprecedented level of activity. We've got insurers reporting a 200% rise in call volumes in a very short period of time. The impact in terms of spend and potential cost in this space is well known. The ABI has reported in its response to the Treasury Select Committee that we can expect to be paying out around £1.2 billion in claims, of £900 relating to BI alone. Lloyds have suggested in excess of £3 billion in claims spend will be COVID-19 related, and that will only increase the longer any lockdown measures continue. It's likely that the full effects of the pandemic is not going to be known for a couple of years or so. We've got other areas, claims for contingency business interruption due to losses occurring anywhere within the supply chain, losses from customers. Investigating those incidents, potentially given the geographical location in some circumstances, with the reduced travel and accessibility, can be extremely challenging. We've got event cancellation claims under an all-risk basis where many ECI policies will contain exclusions for communicable diseases. So determining cover requires careful analysis and when precisely the spread of COVID-19 was reasonably to be considered to have occurred. Outside the BI world, property damage flowing from potentially thick water claims is a bit of a concern. Most losses, and a lot of losses, occur when property is left empty for a period of time. So we may well see a surge in those claims in the coming weeks. It'll be interesting over the re-emergence from the lockdown in that space in particular. One of the challenges faced in particular in property at the moment is not necessarily around the physical inspection of the loss. Many property repair surveys can be undertaken virtually. The big issue remains is customer attitude. Do I want a builder in my house? Builders are faced with furlough issues as much as any other business, and material challenges over supply of products. So those challenges exist across all sectors, and all of which are impacting and will be for some time on the ability to deliver on that fulfilment side. Ben, if you just want to move on, I'm just going to talk a little bit about the impact in the motor arena and casualty as well. The natural byproduct of the current restriction of movement and known fall in the amount of motor vehicle travel taking place, there's been a sharp decline in the number of collisions and therefore a reduction in the number of claims. The data that the day produced by the daily government briefing showed the dramatic effect the lockdown measures have taken with the number of vehicles on the road. The recent lifting of some measures has seen an increase in transportation, both commercial, heavy and lightweight vehicles, but also cars and personal travel. At the height of the lockdown, we looked at around about 25% of vehicle use in that were compared to January and February, where you'd normally expect with better weather for that figure to increase, certainly in the private use space. Obviously, the dramatic effect of the lockdown can be seen. How does that relate in terms of claims? There's always a delayed effect in terms of that lag time of claims being made. And then if we just move the slide along again, see how that looks like from a claims volumes perspective. So this data has come from the claims portal, which is used for low value injury claims across the sectors. We saw a drop-off of 52% in April from claims that were submitted in March, which in itself was 13% reduced from February. And if you look on a year-on-year comparison, that's 57% drop-off compared to April 2019. Not unexpectedly, April has won the race so far. It's the lowest ever total number of claims submitted through the portal per business day since its inception, and for motor that's back in 2010. So a huge and dramatic impact on volumes, certainly in the motor space. What we've seen in these new claims across the entire market is that there's a difference in profile between commercial and personal lines. As you might expect, there wasn't a severe reduction in the amount of, or lesser impact on commercial vehicles, I should say, on the road. And so the ratio between those incidents has changed somewhat. We've also seen a reduction in the number of passenger claims. Again, that's to be expected as people generally conform to the social distance guidance that it's in place, and certainly for the period that these charts consider. It'd be interesting to see when May's numbers come out and how that's impacted as the lockdown eases, with a lot of people obviously travelling out to picnic spots and wherever else they may be going accordingly. So that profile might be very interesting. Well, another sort of side effect here is that the severity of incidents that have been reported have increased. Disproportionate numbers of pedestrians, joggers, more cyclists on the roads, including those who are less experienced, combined with somewhat worsening driving behaviours, with speeding due to less congestion. There's been a dramatic rise in the number of traffic signal collisions to people missing red lights and maybe not being as attentive as they would ordinarily be. Reduced familiarity with controls, and even an impact of vehicles not being maintained in the condition that they were even 3 months ago, with MOTs allowed to expire for a period of six months. So although volumes have dramatically decreased, it's important to stress that where the severity is increased, so it would seem, it's going to impact on the loss ratios for this period of time. So we need to ensure that that's being looked at, and that loss ratio may not be as dramatic for some organisations in that space as may well be seen. We move on, just a quick look at the casualty figures. Again, a drop-off as expected in employers' liability and also public liability for injury. Increased social distancing measures, closure of businesses, furloughing of staff, reduced movement generally is a natural byproduct of that reduction. So although we've seen it's not as great a drop-off with motor, 40% or so for employers' liability in April to March. That was around about 11% lower from those submitted in February, but comparatively year on year, that's 46% lower than April 2019. And PL, very similar figures as well. They've eclipsed April figures, as again expected, eclipsed by some distance the drop off in March. But what's interesting is that we've also seen a large increase in the amount of claims that have dropped out of this portal process within the liability investigation stage, or stage one, as those who are familiar will know it's called. And that's probably a byproduct of not being able to investigate liability, take witness statements of furloughed staff, or witnesses being able to obtain similarly. So knock-on effect is that inability to perhaps respond to liability as you ordinarily would have done so. We have now seen an uptick in amount of claims that are settled at the settlement stage or stage 2, and a reduction in court proceedings and court packs being issued within that period of time. There's all a changing way in which maybe claims are being approached with organisations' willingness to try and settle claims that can be settled. But yeah, interesting times, and we'll see how that progresses in the next couple of months or so.
Thanks, Andy. Yeah, it's interesting to sort of see actually on the graphs. Obviously, from the claims point of view, we've been able to see the volumes coming in the door, and they are impacted differently across different sectors and different classes. But there have been sort of some fundamental changes in some areas. Ben, if you don't mind just moving on to the next slide, please. We're going to cover our next agenda point, which is focused on indemnity spend and costs. So we're all aware that there is going to be an ever-increasing focus on this topic at the moment, and the potential impact of loss ratios, which MGAs are going to be closely monitoring. In this section, we're going to detail the types of increased costs that we're observing during this period and advise how we're currently helping our clients navigate through these. There will be obviously different topics and different parts of this which we can have more influence over than others, so we thought it was important to share that information. If you don't mind starting off, Andy?
Yeah, thanks Cheryl again. I think unfortunately there's a real potential that claims costs are going to rise in certain areas, obviously not just the directly impacted world of the business insurance and the BI stuff where that obvious risk exists. We were asked, I think, in advance of the session for whether we're going to be commenting a bit on the impact in that motor space, and certainly bent metal claims have seen a dramatic and instant impact on spend, with motor engineers, repairers not being able to offer the same throughput of work, meaning slower inspection and repair times, part suppliers experiencing delays, both obtaining delivery of parts or able to deliver them to garages, and repairs simply not being able to take place. That knocks on the effect of pressure from body shops to increase repair rates and the need for extra valeting, deep cleaning, all leading to increased costs of those claims. The knock-on effects of the increase in repair time then leads to longer periods of time where vehicles are off the road, and if that's a third-party claim, then credit hire duration and hire periods increase accordingly. And we've seen it was almost instantaneously credit hire organisations saying they're experiencing delays in sourcing engineers, being able to inspect vehicles. And arguments over both the need to hire a vehicle and the duration of hire has dramatically increased costs over a really short period of time. That shortage in supply, be it expert vehicle parts, deep cleaning equipment, becomes more commonplace, and also the argument over how difficult it becomes to purchase a replacement vehicle. The shops are only opening relatively recently. So all of this adds to arguments that can be led to say, well, this person should have remained in the vehicle for longer periods. So you're faced with sort of a new combination of arguments whereby on one hand you've got a claimant who perhaps has a reduced need for a replacement vehicle due to travel restrictions. That absolutely needs to be explored. But then on the other hand, you've got the argument that that person's a key worker, as an example, and may well need the vehicle because public transport is being discouraged, and running that argument is difficult but may not be favourably received if that's the only aspect you've got to challenge. I think, that being said, we've got claims management companies and credit hire organisations facing their own cash flow problems. The reduction of accident volumes takes hold, real opportunities to explore amicable settlements on those cases that maybe would have elongated historically, and also potentially look at settlements on a bulk basis with certain suppliers where volumes are relatively high. All of these things I think should be explored. We've got huge pressure in the bodily injury space across all aspects of the casualty world. Issues surrounding delivery of rehabilitation, increasing claims for loss of earnings, and the arguments whether an injured claimant is out of work due to the injury suffered or a result of being furloughed, or due to the economic downturn itself, claims for universal credit. I think that would a hidden aspect of these claims. Where more claims for universal credit is made, you can't break down the benefit type, and therefore what can be recovered as a direct impact of the claim is up for much debate. But yeah, it's an interesting time in that area.
And you mentioned, Andy, claims management companies, credit hire organisations in what you've just gone through. So obviously an incredibly important part of our claims strategy, and to anyone's claims strategy, is ensuring that you know your opponents. So what we mean by that is the ability to ultimately understand and predict the actions of claimant representatives, and by using effectively the data that we already hold and the claims data that we have on activity. So what are these firms, what are these organisations currently doing to ensure that their revenue streams are not impacted, and what are the things that we should watch out for?
Yeah, it's a good question, because outside of sort of that motor space, it exists. You've got real potential for claims management companies and claimant law firms to be representing claims that insurers may have thought have gone away, because simply they're finding new claims difficult to source. There's been some evidence that there's an increase in farm claims activity, with cold calling on the increase again. And constant issue, and this is a historic issue as well, is where the issue of layering of claims increases as financial pressures continue, and claimants find themselves in a position to try and maybe become more of an opportunistic or an opportunistic fraud. The incentive for these organisations isn't going to go away. An impact of the pandemic has seen, we were expecting the second part of the civil liability bill and the whiplash reforms to come into place this summer, having already been delayed once before. They're not coming in until April next year, and so therefore the monetary incentive hasn't been taken away from those firms to present those type of claims. And mentioned layering in claims, vigilance around financial losses presented, particularly around rehabilitation costs, validating that treatment, and ensuring proactivity at early stage of a claim is key. Mitigation to try and combat that inflation. Remote sessions of treatment as well is an issue of concern.
Just to pitch in there, Andy, so when you say layering of claims, appreciate that some on the call might be aware, but for anyone that's not, what do you mean by layering, by fee layering? Can you sort of just expand on that in the context that we're discussing?
Yeah, sure. Claims fee or fee layering refers to the practice basically of boosting the value of a claim through additional peripheral heads of claim. What can you bolt on to that loss? So traditionally, it's things like cognitive behavioural therapy, physiotherapy. Often it's driven through entities in which the claims management company or representative has a direct or indirect financial interest in, and therefore is in their interest to promote such a head of claim. Whether services might be exaggerated or in some cases not delivered at all. It's very difficult to unpick those, and that's where market intelligence and data analysis comes to play. It's increased in recent times and will continue to do so, and spreads into sort of the world of disbursements and legal costs, with fees, translation fees, interpretation, medical agency fees, and travel costs. It's been an example of that. I think it's important to say that although I reference some of the negative activity that's taken place out there, there's some real positives at the moment, where we've seen attempts to secure better working practices.
So there's some good news.
Yeah, absolutely. Not too much, but some. Better communication between organisations, claimant law firms, defendant representatives, insurers. Bilateral agreements in place between some firms, and the ABI has recently extended the agreement they have with the Association of Consumer Support organisations to the 5th of June and probably thereafter, which promotes greater dispute resolution engagement, some relaxation around timeframes for investigating liability where there's a COVID-related impact, ability to undertake remote medical examinations, an extension of time to make offers without pushing a case into litigation. The remote medical examination and remote treatment sessions needs to be considered as not without risk, because you need to start validating the documentation of what's gone on in those sessions. We're already seeing signs that the remote examinations are seeing longer prognosis periods given for injured people than perhaps the face-to-face sessions were doing. But I think there's also a real opportunity for insurers to look at making early settlements on existing claims, an exercise to review those stagnant claims that have stuck on the shelf or historically stuck on the shelf for a long period of time, not really going anywhere. Identifying those claims that could be looked at achieving an amicable settlement now, as opposed to waiting for them to develop and ultimately become more expensive over time, I think is important to do.
Oh, sorry, I had a slight connection issue there, but I'm back, which is great. So we have another point that we wanted to just sort of run through on this slide, which is economic downturn. And you know, it's not to put down on it by any means. I know that you've just gone through some of the positives, but we are sort of anticipating, obviously, a significant recession. And so how can we really use learnings from that and the industry claims data that followed the period when we last experienced that of the financial crash of 2008 to potentially predict what we can maybe see over the coming months and years in the claims industry?
That's a good point. Not to, you know, we're claims people, therefore negativity oozes through our blood. But historically, in times of recession and high unemployment, the motivation to commit fraud increases. You've got organisations and individuals facing real financial hardship, and that's compounded by an inability to claim for maybe the losses that they've suffered. Risk of increased fraudulent activity does exist, and we may well and likely to see a rise in commercial property damage-based claims through fire, water damage, escape water, as I mentioned, as well as in the domestic property side as well. An increase in theft claims, both from personal lines perspective and the commercial spaces. Stock depreciates in value. It's not being shifted. The sales aren't there as they were. Farmed and actively marketed claims, as I've mentioned, on the increase. An uptick in cold calling. Travel becomes less restricted, then you've got businesses re-emerging. You could potentially then see a spike in staged and induced incidents, as well as genuinely claims being financially inflated. Economic downturn, simple reality means redundancies. You've got potential for old grievances that may well surface, claimed by ex-employees rising in times of recession, triaging of the accident books for claims that are not yet to be made, but have potentially been reported, or at least the incident's been reported. An important exercise, but becomes very difficult if that organisation itself has become insolvent. In short, we will see, I suspect, a rise in fraudulent activity. You've got soft, opportunistic fraud trends rising, people running out of money, people prepared to have a go. You know, the motivation factor changes from one of greed to one of need, and a rise in sort of those first-time fraudsters, the virgin entities, if you will. That means that some of the traditional fraud indicators that insurance rely on potentially don't get triggered, as individuals don't appear on industry databases for historic claims use and the like. So review of current procedures, continued awareness of the types of claims that we're likely to see depending on the area that you're concerned with, and certainly for the claims handlers that needs to be undertaken. Looking at the types of behaviours we're seeing is brutally important. The use of technology, behaviour, social media analysis, development of machine learning, more sophisticated intelligence, cross-industry working and sharing of best practice, that's moved on considerably in the last 10 years or so. And it's going to be important that we utilise sort of the learnings of the last 10 years from the last recession, because this isn't a recession as normally would be. It's been born out of the pandemic. So claims for COVID-19 infection itself also poses a fraud risk, which we'll touch on, I think, in a little while.
Mm-hmm. Now that's a good point though, Andy, just around the technology, because actually, like you say, the industry's come on so much in the last 10 years, specifically around the technology and innovation space, that even when we look at data washing that we're now able to do, is incredibly more advanced, you know, than previous, and also even in terms of claims investigations, and for, you know, having the video technology, you know, we're all on it now, obviously, but, you know, even having the technology to be able to kind of go into sites, which we have, and actually conduct investigations that way, so that you're not limiting yourselves and you're still able to validate claims virtually.
You're right. If you flip it around, if this pandemic had happened in 2008 with that recession, we wouldn't have been able to do any of that.
Yeah.
The increase in correct use of technology, must be said, has been vitally important in trying to maintain some kind of business as usual approach, but we're sort of learning from that as well. Yes, it's a very good point.
And just want to do a really quick reminder at this stage to everyone on the call that you are able to ask questions if you'd like to via the chat function at the bottom. I've seen that a few people have sort of joined as we've been speaking, so thought I'd just mention that there. We are hoping to have some time for questions and answers at the end of the webinar today as well. If you could please just move the slides along. Thanks, Ben. Next up for discussion, we have emerging claim trends. At this stage, it's fair to say that the pandemic and the changes that it's brought to society are fairly immature, but it is already apparent that there will be new types of claims that the industry has to react to, and actually some of those we've already seen glimmers of already through activity that we've seen. So what we've done here is we've just picked out a few key trends that we think need to be watched. It's not by any means an exhaustive list, and I'm sure that this will grow and sort of develop over the coming months. But we've picked out a few that we thought would be of interest. So the first are related to insolvency. There will be companies that suffer the fallout and will unfortunately not have the ability to continue trading during this time. Claims will arise out of this, and customers will be entitled to refunds, cancellations will need to be managed. So there's clearly going to be a big overlap here with customer care as well, which there often is in the claims space, obviously, as we are speaking, you know, very regularly with members of the public. And the principles of treating customers fairly will be extremely important to uphold, or as always. We've had actually a real life example of this within the business of these types of claims recently, specifically in the travel space, and again sort of connected to insolvency of a business that we were able to deal with very promptly with our COVID-19 claims workforce. So within 48 hours, we managed to get processes set up to manage the handling of those claims, and it's obvious to say that speed is of the absolute essence when looking at this category of claims, because, you know, the news obviously will be confidential until it's not, and the news about the company and then generates sort of a flurry of activity from that point. So it's really important to have the scalability and flexibility within the business, within the claims handling operation, to deal with those types of claims. And then Andy, I think you're going to cover the rest. So starting with COVID infection.
Yeah. There's lots of things that we could cover, and they would independently have webinars and sessions themselves. But I just want to touch on sort of the direct COVID infection scenario, which is very much obviously very topical at the moment, and we're seeing claims for people who have been infected with COVID-19. At the moment, it's from those that have had severe symptoms and spent long periods of time in intensive care and ventilators, have subsequently unfortunately died. But also the increase in those that have suffered mild symptoms. The heads of claim that could be presented through the scope of this is extraordinarily varied, as well as any NHS charges for stays in hospital. But there's two things to consider with them, I think, is that you've got the legal liability aspect and whether a defendant has breached their duty of care, be it an employee or a third party. Questions likely to follow that the course of an organisation that they've taken around risk assessments, around following government guidance on social distancing and reviewing policies that they have in place to reduce, where practicable, those the risk of infection. The second is the hurdle that has to be overcome, a medical causation. This is not a small issue and one that's likely to be tested extensively, and although it may well be difficult to prove, it's not an insurmountable hurdle in some areas where that perceived risk of infection is extremely high. Hospital being an obvious example, but other areas where there's close contact between individuals. One area of concern there is the sheer number of potentially infected individuals, not just those that have had severe symptoms. I think the latest numbers suggest in excess of 275,000 people have officially tested positive in the UK. We're constantly told that far more people have been infected than that number. So with the deployment of wider testing, and in particular antibody testing, where it can show that I've been infected, potentially have minor or even no symptoms, but have had the infection, I might be able to present a claim. How those claims are approached will vary, and certainly it's an area of real sensitivity, highly emotive claim environment. So it comes back to sort of how we're dealing with individuals with those cases. Very interestingly, we've seen a number of claims management companies and claimant law firms promoting coronavirus compensation schemes. Pop-up firms trading on the same day, they began trading on the same day that the lockdown measures were officially put in place. So I think it's fair to say that claims will be coming. Whether they're successful is certainly another matter. You've also got the risk at the moment of the sort of non-COVID infection-related exposure from the redeployment and retasking of staff. Redistribution of duties. Somehow you've got the sheer speed that new starters have been brought into some areas. Manual tasks being undertaken that maybe they haven't had the required training that would ordinarily be put in place, or a failure potentially to document that training, that could see insurers facing an uphill battle to defend claims that they receive in that space. Psychological and stress and psychiatric issues, it's widely reported. Claims flowing from that may well also follow. Particularly in the key worker space, or those areas that are high in anxiety statuses. The rise of the home working environment presents a new risk for insurers. We'll probably likely see claims from that home environment for upper limb, wrist, back injuries resulting from poor working posture, increased stress levels from that environment, challenges that employees face with combining homeschooling and childcare need to be taken into consideration. A byproduct from working from home and the lockdown measures, we've seen widely reported an increase in alcohol intake, reduction in exercise, an increase to irregular working patterns, longer working days, all of which add to that changed environment that employees find themselves in, and the risks that claims may well follow. Mm-hmm. So leave it there.
It made me sit up a little bit straighter when you mentioned posture, and no comment from me on the increased alcohol intake. It's probably best that we leave that one there. So as we've discussed, we've alluded to the trends that we anticipate sort of maybe around the corner, but these aren't by any means exhaustive, and it definitely will be interesting to see how the horizon does develop over the coming months. This leads nicely just onto our next agenda item of how claims strategies and claims management are evolving to react to the changes that the pandemic has posed. Ben, if you could kindly just move on to the next slide. Thank you. And over to you, Andy.
Yeah, I think challenges do exist. You've got remote working for claims teams, people challenges in particular, how you learn, the ability to simply discuss a case over a desk or refer a case. Standard so the coffee machine no longer exists. Managers facing challenges of that remote working brings through excuse me, the learning development, carrying out appraisals, team meetings, work productivity, disciplinary, management of staff, returning to work if furloughed. All of the risks we spoke of in the emerging trends piece in remote working applies equally to insurers and claims handling organisations as well. But there's also an opportunity to review those current processes and practices. Questions to ask yourself in terms of how can I reduce the number of unreported claims? Is there a better way of using technology to assist my existing processes? Does that process exist just because it's the way something has always been done? Is there something that can now work better that we've identified because of the home working? And we talked about that in terms of the use of technology in the remote virtual investigation in the property and liability space. When we return to an element of normality, the blend of that on-site inspection or physical statement taking as the investigation needs to be balanced, and allowing the use of technology to maybe create a more streamlined and triaged, a better triaged approach. The balance, the classic balance between technology and sort of human involvement is always an interesting one. It's important to understand that in particular is when you're breaking down the transitional components of a claim from notification and intake at FNOL through to settlement and recovery is understanding, okay, does this now allow me the ability to consider omni-channel communication with policyholders and claimants alike? The options on how an individual communicates with the claims handler can vary depending on that anxiety status at any one given situation. So to offer alternatives is important. Increased auditing, remote working, indemnity spend, the pressures that have on claims behaviours, trends that all lead to a real need to require that your reserves are accurate, closure policies are followed, keep an eye on those loss ratios to make sure they're as accurate and controlled as they possibly can be.
Great, thanks Angie. And Ben, if you could just move on to the next slide, please, and it just brings us on to our final agenda point, which is customer centricity. So slightly different from the other points that we've discussed today, which are probably a little bit more technical in areas. This section is instead looking at the importance of the ultimate customer at this time, and why that's key for MGAs. Claims handling obviously is a vital part of the product ultimately that's being sold, and therefore it does impact directly on brand confidence. So we're all aware that the insurance industry is often in the firing line. It's quite often is in the press, and there is a perception that policies may not respond as needed for customers. And according to the ABI, only 13% of customers across the industry say that they fully trust their insurer, and nearly 70% believe that insurers would do whatever they can to avoid paying a claim. Whereas in reality, of course, everything 95% are paid out. So if we look specifically at business interruption as an example, the vast majority of policies don't provide cover in the pandemic's circumstances, and obviously there are things going on with that currently, but the industry potentially would be bankrupt if respective cover was applied to everything. As an industry, perhaps maybe we weren't quite as empathetic as we could have been early on. Obviously, it was a completely unprecedented time, and that may have been where some sort of brand issues did occur. Equally, I think a really important message for us to get out is we are paying those claims that are covered, and perhaps we do need to shout a bit more about this. We're probably quite British sometimes in terms of not kind of sort of shouting about what is going well. Quite unassuming. So during this period, it's really vital that we communicate with and listen to the ultimate customer, and asking questions and asking for feedback will be a way to encourage engagement and to help work against the perception that the industry isn't going to respond in times of need. And in our experience, and using our COVID claims team as an example, I've mentioned them earlier as well, when claims are triaged quickly and customers are provided with full explanations and alternative solutions wherever possible, the communication line doesn't have to break down, even if the response is not one that they want to hear. We've even had compliments and people actually thanking us for the team's honesty and candour, which I'm sure anyone who operates in the claims world knows can be quite hard to come by. So, you know, it's always appreciated. Speed of contact is obviously particularly key. At this point in time, when people are at home more than ever, and perhaps have been given back some hours in the day, although maybe not if you're at home homeschooling, people are more available, and sometimes that can then lead to more frustrations if there's a perception that they're not being contacted promptly by their claims advisor. So it's more important than ever. Having flexibility and scalability as well within the claims operation to quickly respond to surges or emerging claims trends is crucial. So I think it's worth sort of considering that as part of you know, your BCP, and you know, how would your current claims model react to that at the moment. At this stage as well, it would be remiss not to mention data. Obviously, you know, all of the claims data that we hold is an incredibly insightful source for us, and it can help to support decisions on the future directions that underwriters wish to take. So we've seen clients use their claims data to drive better behaviours, and in one instance by rewarding customers with lower excesses for claims reported within 24 hours. That was really a win-win situation for everyone, and you're able to reinforce the F&O process and mitigate against increased costs that generally do arise from late reported claims, get that pertinent information that you need on day one, which is very important, and also obviously the customers are happy paying a lower excess as well. Of course, any process reviews or amendments do always need to be mindful of treating customers fairly. And finally, I think it's important to ensure a unilateral direction between MGA and capacity provider. So close ongoing communication should ultimately mean no surprises and support the overall concept of customer centricity as well. If you don't mind just moving us on a slide, thank you, Ben. We've actually come to the end of our webinar content for the day. So I think we've got about sort of 6 minutes left before the half-1 finish time. So pretty well timed, hopefully, for everyone. On screen, we've got a recap of the learning objectives that we've run through today, although I won't read them out again for you all. They're all there to see. Really, thank you all very much for listening. We appreciate your time, and we really hope it's been a beneficial session that you can take some learnings from, and for your clients as well. If there are any specific claims elements that you would like to speak to us about in more detail, we've included our contact details on the next screen. So if you do want to frantically scribble them down, great. Otherwise, I'm sure that the MGAA will be able to pass these on if requested as well. And I will now hand over to Ben, who hopefully might have a few questions for us.
Thank you, Charlotte. Thank you, Andy. Yes, as you say, we'll be sending out the slides following the webinar in the next day or so. So all that material will be shared then as well. Just as a reminder, if you do have any questions, please use the chat function and they'll come through to myself. But thank you very much, Andy and Charlotte. That was really interesting. Thank you. Got a couple of questions come through so far. In terms of operations within insurers and claims departments, what has the kind of service level agreements and the adherence to those been like in terms of turning claims around, dealing with generic emails and post? Have they slipped or have they been maintained?
Do you want to pick up on that initially, or from a client-facing perspective?
Yeah, of course. Yeah. So, I mean, from obviously, I'm sure that there's probably been a bit of variety amongst the industry, dependent on a lot of that is going to be dependent on how well BCPs kicked in. Obviously, initially, we were extremely fortunate that our IT team did an absolutely sterling effort, and everything was up and running, you know, immediately. So we've been able to really work as usual, and actually, if anything, I think, you know, certainly some people have probably become a little bit more accustomed to sort of the home working and been able to sort of, you know, fit in certain tasks and things during their day a bit better. I think, you know, I imagine that there probably were some struggles across the industry if those plans maybe didn't go quite to plan, but obviously completely key for us has been sort of, you know, the adhering to those service level agreements. You know, they haven't just gone out the window by any means. So, you know, been operating to them as we would normally do.
Yeah. One of the things I'll point on there as well is that in the sort of the liability space, it's not going to notice that certain firms are trying to flood dependents with posts to create that SLA issue. It's something to another byproduct of the lockdown measures, but just echo what Charlotte said there.
Thank you, guys. Another question, will the industry suffer from an IBNR issue? Is this a risk to MGAs and insurers?
I can pick that up. Yes, that incurred but not reported scenario we touched on earlier is problematic for MGAs and insurers in the normal course of sort of the claims environment. But in short, I think yes, there will be more claims out there that have not yet been reported. Organisations dealing with having to react with the pandemic itself, not necessarily claims that they've got to report or incidents to report, furlough of staff, access to documentation, all likely to impact on causing sort of a delay in the reporting of some claims.
Okay, great. Thank you, Andy. Possibly got time for just the one final one then. So does work from home pose risks for potential cyber claims, do you think?
Yes, we didn't touch on cyber in any real detail in the talk, but it's a very good question. I think again it's yes. We saw it was an overnight digital transformation of organisations putting into place their BCPs. And Charlotte said government figures was about 50% of us working from home. Stress testing in some areas wouldn't have happened. The home working environment is different, obviously, to the office environment in particular. How secure that environment is from a cyber threat and also data security threat is a concern. What we see out of it is interesting, but yeah, it is an area that we need to be wary of with the home working environment, most definitely.
Brilliant. Thank you, Andy. So I make it 29 minutes past 1, so it's just bang on the hour. Thank you very much, Charlotte and Andy, for hosting the webinar for us today. We really enjoy hosting these for our members, and I hope that the audience got a lot out of the session as well. As I say, the session has been recorded and will be added to our website, and the slides will be shared after the session as well. But thank you very much, Charlotte and Andy.
Thank you, Ben. Thanks everyone for dialing in.
Thank you very much, and I will end the webinar there.